Hello and welcome back to my weekly update for week 16 2021 of my real money long-term value investing portfolio. And with that, hello to another edition of Investing for Generations. And in this week there were some Q1 earning reports and I will go through this. And then I will also tell you about my new buys in my portfolio and of course the overall performance of my portfolio. So full transparency, and if you like that and if you like the whole idea, then just like this video, share this video, subscribe to my channel, and then you can follow me on my road and hopefully you will find some value in that. Thank you. First of all, let's go through the Q1 earning reports of last week, and three of my companies reported their earnings. It was Intel, Coca Cola, and American Express. And let's start with Intel. Of course, Intel is the most interesting thing for me because it's the biggest position in my portfolio, and you find some other videos why is that and why I think Intel is a great long-term investment, especially at the current low stock price. On Thursday, after close, Intel reported their Q1 earnings, and Intel beat on earnings, reporting $1.39 per share in pro forma profit on 19.7 billion in revenue, easily surpassing analyst projections of $1.15 per share in profits and 17.9 billion in sales. And so overall you could say, wow, that's good numbers. The stock should maybe jump when you surpass the estimates, but no, it wasn't like that. The stock dropped. And the reason is even earnings beat in Q1 with an earnings warning for the second quarter and beyond. This was not that good. Management forecasts that in Q2 sales will decline to about 18.9 billion, which is below Wall Street's estimates. Earnings guidance for $1.05 per share likewise looks likely to fall short of the street's projected $1.09 per share. Similarly, for the full year, Intel projected revenue will not exceed 77 billion, which appears to be slightly less than analysts were looking for. Pro forma profits might eke out a win if they reach Intel projected $4.60 per share. Wall Street forecast only $4.58. GAAP profits will once again fall short of the number, with Intel promising only $4 per share. And that's just the reason why the Intel stock dropped, and it dropped quite a bit. Yesterday the stock dropped over 5%, in the peak it was even around 7%, and now is trading at $59.24. Second of all, Coca Cola reported their Q1 earnings also last week. And also Coca Cola surpasses the Q1 earnings and revenue estimates. Earnings and sales beat the SEC consensus estimate and improved year over year. Comparable earnings of 55 cents per share beat the SEC consensus estimate of 50 cents and improved 8% from the year ago period. Revenues of 9.020 million surpassed the SEC consensus estimate of 8.466 million and improved 5% year over year. Organic revenues rose 6% from the prior year quarter. So overall, very good, very stable numbers from Coca-Cola, and so no need to worry here. And also the stock price reacted positive on that. It just went up a little bit to currently $54.47. So everything's fine here. Coca-Cola already is quite high valued, but I will just stick to my position here because it's just a very good, very stable company with a good, nice dividend yield of over 3%. So everything's fine here. And last but not least, also American Express reported their Q1 earnings, and American Express Q1 earnings surpass, but they decline year over year. First quarter 2021 earnings of $1.74 per share, beating the SEC consensus estimate by 3.6% on the back of lower expenses. However, the bottom line fell 12.1% year over year due to muted revenues. Total revenues of 9.06 billion missed the SEC consensus estimate by 1.9% and also declined 12.1% year over year. Good earnings bad revenues, still very difficult circumstances. And so overall the numbers are okay, of course not great, but this is just the circumstances of the pandemic, and we still not really recovered from that, and that this means also American Express have to suffer. But overall, still in this very difficult circumstances, they are able to generate earnings and positive earnings. However, the stock fall yesterday after they report the Q1 earnings around 2% to now $144.33. And also, as Coca Cola is already well valued, quite high valued, but also here no need to think about to sell. The business is running, the business is even running under difficult circumstances, and so I will just hold my position. Then up next, my transactions of last week. So with a quite high dip yesterday of over 5%, I used this chance and add to my Intel position. And so I bought yesterday another 8 shares of Intel for $59.05. And now currently I own 141 shares for a purchase price in average of $51.65. And I'm up with that 15.61% or $1,136 already. Even if you really estimate they will only earn $4.60 in 2021, and after that just a growth rate of 2% over the next 10 years, then you still have a expected return or discount rate of 10% and come to intrinsic value under these circumstances of 61, which is almost the price we have now. So even under really, really difficult circumstances and just almost no growth, it seems like Intel is a good investment over the long term. And so I'm very happy with my position, and also was happy to add to my position. And the second stocks I bought last week was the stocks of MI Homes. I made a video at the start of the week. You find the link here up on the screen. So, and then there I explain why I bought MI Homes and why I think it's a good investment over time and for the long term. And I bought my shares on April 19th for $61.30. I got 39 shares. And of course, as always, when you buy something, the first thing which happened, the stock dropped around 5%, but now already recovered to $59.61, and so I'm down a little bit. But of course, this is not a big deal, just kind of funny. The whole pie of my portfolio looks like that right now. So Intel is still the biggest position now with 8.47% of my portfolio, followed by Berkshire Hathaway and so on. And MI Homes, one of my smaller positions right now, you find here. And also for all of the other companies, you find deeper analysis on my channel. So check this out. If you find any value in that, subscribe to my channel and you will get 1 or 2 stock analyses every week. And of course, every weekend, my weekly update on my portfolio with all the transactions I did. And with this portfolio, I quite outperformed the market, the S&P 500. When I look at the performance from the start of 2021, then my portfolio have a performance of 15.72% compared to 11.29% to the S&P 500. So our performance of around 4.5%. And if we look to the performance since the start at the 2nd of December 2019, then we see that this is quite an outperformance to the S&P 500. My portfolio performed 63.86% since then, and the S&P 500 over the same time span only 34.24%. So this is quite good. I'm very happy with that. All of that without big hype, without Bitcoin, Dogecoin, Tesla, other EV hyped stocks or whatever. And so I'm really happy with my kind of boring investments. And as I said, if you like the whole idea, if you like the mindset, just follow me and subscribe to my channel. That's it for today. Thanks for watching. See you the next time with another analysis of another stock. See you then. Take care. Bye bye.